lot of people will have thought they had prepared for it. And then you get things like the interest rise, at the minute the cost of living crisis. There's so many factors that people didn't take into account. Where are we at, and what's your suggestion?
OK, well, what we've done is we've conducted a survey of over 6,000 members of the British public. We've been asking them about their pensions, not surprisingly, but also about other savings and investments which they have, the role that inheritance might play in the retirement plans, whether they're likely to own their own home when they come to retire, or whether they'll be paying a rent, and whether they will be retiring as an individual or as part of a couple, because all of that is in the mix. And then we've worked with expert economists to forecast forward the sort of lifestyles that people can expect when they do retire. And that ranges from a comfortable lifestyle where, for example, you might have around about £150 a week to spend on food, to a more basic retirement lifestyle where you might only have around about £50 to spend on food. And what we found was that just over a third of people are going to be, quite comfortable. They will have that £150 plus to spend on food, go on foreign holidays, be able to run a relatively nice car. But at the other end of the spectrum, it is quite polarised. There's also just over a third of people who won't even have enough pension income to make that basic standard of living. They will have to retire on state benefits just to make ends meet. So it's quite polarised.
Gosh, and the reality of what that means in a cost of living crisis when you possibly have to see your water bills going up by 40%, it's just incredibly tough for people in their dotage, frankly.
It is, and people are trying to make up their mind. I'm forecast to have a retirement shortfall. Do I put money away for the future? And there's so many pressures on people's wallets and purses at the moment in terms of the day-to-day bills, which just keep going up.
And what about you? We're making a lot about pensions at the moment. We're talking about Thames Water and how many pension funds are invested with them. It's an unpredictable market. Do people realise how unpredictable it is, and what is the prediction for this unpredictable market?
Yes, well, a lot of people we survey them don't actually know that their pensions money is invested. They tend to associate a pension as something that operates a bit like a bank account with interest. Most pensions in the private sector that are offered by private sector employers certainly are invested in things like stock markets, and when the value of shares goes up or down, it does feed through to the value of people's pensions. But what we tend to do, though, is we tend to invest in a wide range of investments, not just across companies, but in countries around the world, so that if there's a blip in one particular sector or one particular company, it doesn't have an overly large impact on your pension pot.
If anyone's watching this feeling particularly worried, is there any one place you would direct people for really sound advice? Or perhaps they're a bit younger and they're looking at their retirement and thinking, how can I make sure I don't find myself in this situation?
I think there's two things to do. That most people are going to retire with two types of pension. They'll have the state pension, and then they'll have a private pension from their employer. Now, the state pension is index linked. They've got the triple lock, etc. It's currently over £203 a week. So if you retired as a couple and you were both entitled to the full state pension, you would have £20,000 coming from the state pension just to get started. But in order to get the full state pension, you would need to have worked for 35 years, where your earnings during those years were sufficient to have triggered national insurance payments that would give you a credit towards a state pension. So it's worth logging on to the government's website, the State Pension Checker, and just seeing, are you on course to have the full state pension? And then there's help there about what you can do if you're not. You probably have to work a few more years, etc. In terms of private pensions, your employer will auto-enrol you into a pension scheme once you reach the age of 22 and you're earning £10,000 or more. They will normally auto-enrol you at the basic rate, which is equivalent to a total of 8% of your salary. Many employers also offer more generous pension arrangements. So if you put in a little bit more of your own salary, they might put in a lot more of their money on your behalf. So it's always worth checking, does your employer offer more generous pension arrangements, and would you want to sign up to those?